Every builder will sooner or later encounter a banker who issues a construction loan. I built 17 houses, 5 of which we financed through a construction loan. In this video, we will talk about it. How to prepare yourself for obtaining a construction loan. How to find a lender that will issue a construction loan. What challenges will you face? What conditions can you get? All of this is discussed in this video. 6 years ago, when I started building, I had huge illusions that everything was very simple. You want to build a house, bought the land, went to the bank, took out a loan, and started building. We sold the house, paid off the loan, and that's it. Life is good. In reality, the first thing to do is to assess your capabilities for obtaining a construction loan. So, what questions would I ask myself? First, do you already own the land? And how was it purchased? Through a loan, or did you pay cash for the land? The second question you will have to face is what your credit score is and what your partner's credit scores are. Personal credit score. The next question, what is your borrowing history? Have you taken any loans before? Your personal ones, how did you manage them? Was everything good with that? Were there any problems? It is necessary to assess your capabilities in terms of assets. If you have cash in the account, because the bank will request statements. If you have any assets that you can use as collateral. If you have the opportunity to make a down payment when you are applying for a construction loan, and before you go to the loan officer or the bank, you need to take this checklist and simply check if you are ready to take this construction loan. I have prepared the checklist for you, and the link will be in the description of this video. Come in, check yourself, and then either go to a loan officer who can help you get this loan, or go directly to the bank if you are ready and feel capable of taking it on your own. The next step is to carefully choose a lender or financial institution or creditor who will issue you the loan. There are several options. For example, when I arrived in Austin 6 years ago and started looking for a lender, I had 62 meetings in restaurants and spoke with different people. Of course, I was turned down by everyone because I had no history. But then I learned that it is possible to get a loan from a bank. And indeed, at that time, some banks were issuing construction loans for spec homes. You can obtain hard money. This is quite expensive money from private lenders. Or you can find a private lender altogether. This is just a private individual who is willing to lend you money. Today, many banks do not provide loans for spec homes. These are homes that you build to sell. Of course, you can take such a loan if you have sufficiently good assets, and you can use those assets as collateral. But if there are no assets, it is likely that the bank will not grant you this loan today, because it is a rather difficult time in the market. Homes are not selling well, so banks are mitigating their risks. I even know that some banks have closed their departments for issuing construction loans for spec homes. But if your client orders a house and guarantees repayment of this loan, you will be able to obtain a construction loan from the bank. I updated the list of banks that issue construction loans this year. The link will be in the description of this video. Since traditional banks are currently slowing down on issuing construction loans for spec homes, private lenders are very active, and this presents an opportunity to analyze and obtain a better offer. So, you have selected a few lenders that you like for one reason or another, or that were recommended to you, or perhaps you met with them and felt that you want to work with these people. What would I do next? I would fill out the necessary application and ask them to provide you with the relevant terms and conditions on which they are willing to lend to you, including all details. What could the conditions be? It is the interest rate. It is the point when issuing the loan. That is, when you obtain a loan, the bank takes a non-refundable point that remains with the bank. These are called points. It can be 1, 2, or 3% depending on the terms of the lender or bank that is issuing your loan. For example, private lenders who provide hard money may not charge this point at all. And this is the opportunity to avoid paying an additional 1 to 2% on the loan amount. Regarding points, I want to emphasize that when you take out a loan and will receive it, in parts in the future, you must pay the points up front for the entire loan amount. For example, if it is $1 million and you took 2% points, you pay $20,000 non-refundable on the deals. It is also very important to ask the lender how much of the budget they are willing to provide you. Because 2 to 3 years ago, lenders were willing to finance 80 or even 90% of the budget. Today, these percentages have dropped significantly. People finance about 50% or even 40% of their budget. That is, you will need to think about where you will get the remaining money. After you understand what interest rate you will be paying, what points, and how much you can get from your entire budget, you need to clarify the loan term, because usually the loan is issued for 1 year, while you may take 2 years to build the house. And after a year, you will face the question of where to get another loan, or how to refinance it, how to extend it. When extending the loan, you will likely be asked to pay points again. This will be an additional expense for you. Be sure to ask what term you are taking the loan for. I am Igor Stepanov, a professional builder, and I build houses in Austin, Texas. If you are interested in understanding how the construction business works, how to build a foundation, a septic system, a frame, whether it is possible to bring materials from Europe and adapt them here in America, as well as various details and technologies of construction, I invite you to join our construction course. I look forward to seeing you in our community. Next, it is worth clarifying when you need to repay this money after you have completed the house. Right away. Or can you get a bridge loan to extend this loan? Because if your house doesn't sell, how will you close this loan? Because a construction loan is issued only for construction. The house is built, after which you need to either return it or take another loan already secured by the completed house. But that's a completely different story. Another cost will be the processing of the loan itself, how much the title company will charge, and how much various other fees will be. It seems like a small amount of money, but it covers all your expenses. Theoretically, I have heard that there are banks that issue the entire loan amount, but in practice, banks tend to be cautious and usually release funds only after you have completed a stage. Foundation, frame, they will be insured, send an inspector, check, pay money as late as possible. Banks simply want to be sure that you are investing money in the exact project you are building, which is why inspections will be necessary. Without this, it will be impossible to receive the next tranche. Stage number 3. You will need to prepare a package of documents. Of course, this will include an application in which you must provide all the necessary information. You will be required to provide certain documents for the company or your personal documents, which may include ID, SSN, ITIN, and EIN of the company. The bank will provide you with a list of these documents, but you can start preparing them now. You will be required to provide the tax return of your company or your personal tax return, or possibly both. They will ask for documents related to the land if the land has already been purchased and a project has been created. You will definitely be asked for the design of the house you want to build. You will definitely be asked for the budget. You will need a home budget because the budget will be the basic element from which the amount of financing is determined. You will be asked for bank statements from your personal account or accounts, statements from your company or accounts of your company. You will be asked for general contractor insurance, contractor insurance. If you hire a general contractor, you need to provide their insurance. You will definitely be asked to provide insurance called Builder Risk 1 or 2 days before obtaining the construction loan. It is issued specifically for the house that you will be building. And the bank will check your credit score, and be prepared that when applying, the bank will check your credit score, and this will have a significant impact. It may drop for a certain period. Therefore, if you are not sure or you do not want your score to drop, do not submit the application right away. Think about it several times. There is one more very important point, which is called appraisal. Banks usually require an appraisal. Can you tell me how we can get an appraisal if the house is not yet ready? Yes, they take nearby houses, possibly newly built ones, and assess what the value of the house will be in order to understand that your budget is not overstated. Can you then perhaps sell this house for that price and pay them back the loan? You will likely have the appraisal done when the house is built in order to then transfer the loan from a construction loan to a regular loan. But at that point, the situation is simpler. You have a house and you can make comparisons. And usually banks request even several appraisals in order to conduct an analysis. Step 4. The loan has indeed been obtained, but unexpected surprises may await you here. As a rule, banks do not provide money up front for the start of construction. This is an important point that I personally did not know, and it was a big surprise for me when we signed the loan. We have $1 million in credit, but I cannot start construction because they do not provide upfront money. I had to find funds and begin construction. When we finished the first stage, the foundation, I submitted an application for the first draw. After that, they send for an inspection. The inspector comes, evaluates how you completed the first stage, and issues you the first payment, the first draw. So, an important point is that construction is something that depends on the schedule, and you need to build quickly. Financing constantly slows down this process. The procedure for obtaining any draw takes about a week and sometimes up to 1.5 weeks. Another bureaucratic thing you will definitely encounter when taking out a construction loan is that banks will require you to obtain unconditional waivers from contractors. That is, you will need to obtain a document from the contractor at each stage when you have completed it, stating in this document he has received the amount from you and confirming he does not claim any lien on the house. This is called an unconditional waiver, a document that guarantees the bank that it will not encounter disputes with this contractor in the future regarding the fact that you did not pay him money. In addition to needing money to start construction, since the bank does not provide upfront funds, after you take each draw, your loan will increase and you will need to pay interest on the loan every month. This is an important detail that we often underestimate at the beginning. You need to have this money in your account in advance because if you happen to miss a payment even once, the bank will immediately stop financing and your construction will come to a halt. So, the house is built, you have received the entire construction loan, you have the certificate of occupancy, and you have all the documents for the house. Next, you will face the challenge of how to transform this construction loan into another type of loan. There are several ways. The first is a bridge loan. Perhaps your bank will allow you to extend this loan and you will be able to sell calmly for another 6 months or a year. There will be different conditions. Be prepared. It will be a more expensive interest rate. You will also need to pay some fees for the transaction again, and possibly even points. But if a bridge loan is not possible, the next option is to convert this construction loan simply into a mortgage. However, you will then need to buy this house. This is very complicated. Often people lack the history, assets, and opportunities to buy a home. If you cannot buy it yourself, perhaps your partner will buy this home. This is a big problem. There are practically no normal ways to convert a construction loan into a mortgage. If you built this house for a company, especially if you took a loan for the company, then ideally, of course, you should sell it and return the money.